Thank you so much, Anita.
Thank you, Ram, for the wonderful introductions, and it's really a pleasure to be here. And first of all, a very big thank you to Tradepass for organizing this event, and most importantly, once again, welcome, and we really appreciate the delegates, the industry leaders, thought leaders, to have gathered here for this two-day event. See, frankly speaking, this event is about digital disruption, digital adoption and all. But, I mean, if we look at what we are going through in the last 2.5 years, everything has been digital, which is good. But once in a while, face-to-face interactions do matter. And the impact cannot be just brushed aside. So it's really good to see that we are getting back there. It's refreshing, exciting, and we'd really like to thank all of you for gathering here. So I know we are running a little late in terms of the sessions, timings, the lunch is round the corner, but I'm sure that the panel we have today, we'll really have some engaging discussions on 3-4 important areas which probably didn't get covered in a couple of sessions, but I'm sure we'll be able to address those. If you look at what has happened over the last 1.5 days, we have covered many areas. I mean, we have covered topics around how technology and banking should coexist. We have looked at areas from payments to business banking, how they are transforming in the digital age. We had looked at one of the most important aspects, which is customer experience, which matters, which is completely different when you talk about digital channels. And we have also looked at, just a panel before this, on the data and analytics, which I'm sure works in the background, but it is what would drive many of the success of our digital initiatives. So continuing from there, while we're going to focus on 3 important things. One is the pace of digital adoption. I think that is very critical, especially for bankers like yourselves and banking technology professionals like me, because both of us at the end of the day have one common objective: how we service and what kind of experience we give to our end customers, which is the banking service users or the financial service users. I know there are a lot of insurance firms here. So that's one topic. Second is, we probably didn't look at some of the important segments of customers. I mean, when we segment our customers, we have retail and corporate, but within that, there is an important segment, which is the informal segment or the medium small enterprise segment. I mean, that segment accounts for a large portion of the GDP and the consumer goods business that we do. So how do we use digital to sort of improve the experience that they have, the services that they get? And third important aspect that we're going to look at is what's the next level we want to achieve in digital, which is essentially about hyper-personalization. And I'll come to that specific question, which is what probably will help the banking industry reach, or sort of in many cases even go ahead of some of the other industries that we are looking at, which is undergoing digital initiatives. So without further ado, I think we'll start off. We have a very distinguished panel. Ram has done the introduction, so in the interest of time, maybe we'll proceed with some of the important things. Maybe I'll start off with you, Ashish, the first question. See, it's more on the pace of digital transformation. We know for a couple of years, last couple of years, banks have been trying to move customers from the branch to the digital channels. Quite a bit of that has been achieved, but there's still sizable segment which still wanted to interact with the bank or do business over the branch. Now, all of this changed quite drastically when the pandemic hit us, where branches were closed, people couldn't move around, and so they didn't have any choice but to go to the digital channel. Now, under these circumstances, how are banks looking at addressing, there is always a human connect and a personal connect, emotional connect factor, because we're talking about money, trust here. So, and this move has been very fast. Okay, a lot of things have moved digital. So how do you bridge that gap? That's the first part of it. And second is, which is also related to pace, digital doesn't work alone on thin air. It cannot alone work on its own. What kind of strengthening you need to do to your back-end systems equally fast to support this digital initiative? Okay.
Thank you, Amitava and Tradepass for giving me this opportunity to come to this forum. So yes, I was bit this thing that we had so many forum discussion speaker. I was wondering why nobody is talking about COVID, which was the biggest disruptor in last 2 years. Yeah, which has changed the entire banking industry completely. Okay, the things which were supposed to be planned in next 5 years, it has accelerated in, you can say, 1 year or 3 years. So it has completely changed it is a paradigm shift in the banking industry, the way we were serving our customer, as you rightly said. So now there was you can say when this, fortunately we did not have a kind of lockdown in Kenya, yeah, but yes, the physical visit to the branches were restricted, okay, and then even our customers, they were a bit concerned about having one-to-one discussion, or even our relationship managers going meeting them, which was a norm earlier. So that gap was there, but at the same time, technology comes as a boon to the bank, okay, and technology helped us to mitigate or to fill that gap which was there during the physical interaction, and now we are meeting virtually to our customer. But the advent of all this video conferencing and other technologies like Zoom or WebEx or Microsoft Teams, these kind of innovations, Zoom, you know, right, how suddenly there was a surge in the market share of Zoom. So people quickly adopted, even our customers, fortunately, and the banking industry people are here. Our customers were very, very helpful, and they understood the situation at the ground, that it is for the safety of both customers as well as the bank people. Okay, we were restricting ourselves from physical meeting unless it is really required. So this gap was filled by all this technology. We were able to still see them using our video conferencing, all this mode of channel. We can talk to them. We can present to them all the documents, our presentation, our product, we can still showcase. Okay, and so that somehow that it was not a complete gap. Still you had that touch remain with the help of all this technology. And our customers also, they were very helpful. They quickly, whenever earlier we used to go to train them as soon as we onboard our customer for any internet banking facility, we used to go for a training to their premises. But after COVID, we could not do that. But when we asked them to come on board on some virtual meeting, virtual call, where we take them through the entire internet banking application, they were very happy. They were very happy, and in a sense, it helped them also, because the travel time was kind of saved. Yeah, earlier either they were coming to our premises or we were going to their premises, so that travel time we saved on that. And then from their side also, if they are coming to our office, only 2-3 people can come for training. But when we were doing all this thing over the virtual platforms, all their staff, the relevant people, their accounts department, their IT, so the number of people who can join the call also, that helped them to onboard more people on the training part. So that is how it actually helped. And then, as I said, it accelerated your now this entire onboarding process, customer say interaction also increased because of this. Because earlier physical, you have to get an appointment with your RM, or if the person is busy, but virtual immediately in just half an hour, 1 hour notice, you can say, can you come on call? I'm sending you the link. So immediately they come on call, and then we can take them through the entire product. So actually it helped to accelerate all these things. And the second part is, as you said, how, and it also as a bank, it actually all the bank, they put more now, emphasize, they have invested now more, how we can do this offline interaction now. Yeah. So say we invested, for example, in our bank, we have implemented enterprise call center management solution. So what happens now, as soon as customer calls from their registered mobile number, automatically system picks all their data from our core banking or CRM and other system, and our call center agent, before picking the call, they can see the entire 360-degree portfolio relationship of that customer on their dashboard. So they know already whom they are talking to before they pick the call. So those kind of innovation, implementation, that is accelerated. So that is the customer, you said the second part, how the back office thing, this is how, then we trained our entire customer service department. I'm happy to hear No Before is here. So we partnered with No Before, and we are running a customer security awareness program in our bank. So we trained our customer service team also, how they can identify the red flags in, say, some email communication, or somebody is calling, how they can verify, because as the technology suddenly adoption increase, the challenges also increase in terms of security. Okay, because you are not able to see the person, mostly you are dealing on call or phones now, because physical visit is restricted. So we trained our customer service. So lot of training and other things also went on because of this COVID disruption. So this is how banks are now facing this challenge, and actually it has helped to accelerate all these so many areas in the bank.
Yeah, thank you, Ashish. In fact, some of the things that were done during this period, the innovations hopefully will stay with us and become permanent feature. Anita, a question to you on just continuing on that part. I know your organization definitely has grown very fast over the last 2-3 years. So aside of what Ashish mentioned, are there any other things that you did or initiatives that you did, whether it is leveraging the social channels or anything like that, which brought this difference? Because your business probably grew during the period when this pandemic was at its peak, and where you probably you focused more on the digital initiatives to onboard customers. So anything that you want to share which sort of disrupted the overall banking services and onboarding aspects?
Thank you. So unfortunately, I was not in Letshego during COVID. I joined in November. But however, a lot has gone on in our organization. And of course, a lot of them have been influenced by the pandemic. So a lot of effort has gone to build technology that allows us to offer our customers channels of their preference. So from early last year, or actually 2020 towards the end, the organization sought to build an omnichannel solution in-house. So for those who don't know Letshego, we are based in Botswana, but we have footprint in 11 countries in Africa, Kenya being one of them. So the organization took upon itself to really invest in technology and in resources that help build this technology. And therefore, we're able to build our own omnichannel solution across all the different platforms where customers are able to access our services. And we actually term it the digital mall. I don't know if my colleague Russell mentioned it yesterday. But basically, we give our customers the ability to access our services across channels of their choice, right from USSD all the way to web, Android, and iOS devices. And the beauty about it is, being an agile organization, we've been able to incrementally scale the kind of products and services our customers are able to access on the mall. And we use that incremental approach. So if you look at, for example, the case of Kenya, so the Kenyan app has currently only has one product for the retail space. But if you look at the other countries, you find they have more use cases already deployed on the platform, and that just shows you the technology that has gone behind that, and the fact that even as we add use cases onto that particular platform, we are cognizant of what are we adding? Are we adding to deliver value because of a customer requires a particular a use case or need, or are we just adding products because we think that's the best from a business perspective? So we're listening to our customers more as we add onto the platform. Further to that, given that in Kenya currently we have about 29 branches spread across the country, and because of the pandemic, access to our branches was limited. Therefore, we really improved on our contact center, our contactability through social as well, and also through the WhatsApp channel where customers could easily ask and request for our services to be provided. Yeah, thank you.
Great. That's good to hear. In fact, some of these channels, do provide a lot of efficiency on the cost perspective as well, not only just the experience, which then obviously can be transferred back to the end customers for their benefits. Moving on to a little different topic, which is on, Angela, maybe you can just share your thoughts on this. The ecosystem that we are living in today, say let's take an individual in terms of let's take an individual, the different organizations in its daily life whom they're interacting with, whether it's their travel and hospitality, whether it's the medical segment, whether it's education or retail, how they interact with their telcos and all. The overall ecosystem is undergoing a big disruption in terms of digital. Everybody is defining an experience, trying to take it to the next level. And that is sort of the expectation from the others when we're talking about as an individual. And what it means is that one of the areas is about personalization in terms of products, service, pricing, which was always there because we wanted to have customer loyalty, larger wallet share differentiation and all. But it's going to a next level, which is called hyper-personalization backed by data and analytics and all. So we heard a bit about it yesterday during the CX session where some of your peers from the CX department highlighted that they do really want to do it. But what are the practical obstacles to achieving that level of hyper-personalization from a banking, financial services perspective? And how do you think those can be overcome? If you can just share some views on that. Yeah.
Sure, Amitava, thanks. And it's true, we all want to do that, and that's a super world that we all want to get into, the ability to add mini apps so that my application, when someone goes in, they are able to get every kind of service there is. That's why you're seeing banks like ours investing in mobile money platforms and then thinking about how do we create the infrastructure around it and ecosystems. I was very excited when Mary was speaking earlier and she was talking to us about eKYC and onboarding and building those ecosystems. I dug her up and then she told me that was what she wants us to get to, not where we are, which I really held against her, but I'm over it now. We are going to work together on it. And the critical thing here is that we all know we want to do these things. We all want to be able to build, we want our bank platforms and the organizations that we work for to be able to collaborate across fintechs and across banks and bring that world to life. Like Anita is mentioning, like Letshego, for us, we are working with them to try and figure out how do we integrate them to give them the APIs to get them to where we want. Because not all of us should be trying to run around and build similar infrastructures. Right. If you look at Northern Europe, this is what I believe the Stanchart lady also mentioned about the fact that they have PSD2 open banking. I think she talked about yesterday. And that creates a significant difference because it means that as an individual, I should be able to see all my bank accounts, all my wallets, regardless of where they are held. Yeah. Now, that kind of world, for us to build it, is going to require a lot of cooperation. Because here, if we are going to wait for regulatory and laws to be made to support it and policies and so forth, etc., we will be waiting a while. Yeah, and especially if you're thinking about it, a lot of people are trading cross-border. It means you also need to be able to drive this across the continent. I saw the other day there was an article that was written that was saying that there were 5 countries, what was it, Singapore, Malaysia, 5 countries in Southeast Asia are now saying they are not going to trade in dollars for cross-border transactions, and they are going to integrate their mobile money platforms across that little bit of region, which is, I believe, almost 800 million people in that region alone, if you count Indonesia in it.
Yes,
I mean,
yes.
you are talking about the opportunity of a lifetime here, because it means you can actually rework how financial systems work in the world. And there is a great opportunity to do that. So for me, when we're talking about hyper-personalization, it's about whether or not we have the platforms, the systems, the wherewithal as banks, as insurance companies, as financial institutions, to work together, even if we have to go ahead of where the regulator, the government, and all those platforms are at. Because all those solutions, by the way, exist in one place or the other. I'm sure you can walk them through what some of the things your company does are. And a lot of them would be fairly surprised about what they can be able to do with what is available today from a technological standpoint. It is whether or not people are willing to put in the effort and collaborate amongst themselves
Absolutely.
to take it to that level of personalization for the customer.
No, absolutely. Totally agreed. In fact, I just want to narrate one incident, 2 incidents essentially. When I moved to Dubai, I had some constraints with my passport getting expired, and I had to even travel from an important customer workshop. So I exactly had 24-hour window to open an account. Otherwise, my company said already my 2-month salary was in arrears, and I had to run my expenses. So they said, why haven't you opened your bank account? Okay, that day I decided, okay, let me just do it. Stop all the other work and all. I'm not going to name the banks here, but so I just Googled, I said, I don't need too complicated account to start with. Later I can look at it. Let me see the only criteria was how fast and how seamlessly I can open the account. And I at least needed the account number and the internet banking credentials, and the IBAN number and the account number by tomorrow morning so that I can share and go. So one of the banks, both the banks almost move parallelly, and the activation part, the activation of the account, okay, it was almost month end. One of them said, we'll do it, and an agent will come and do the biometric with your national ID and we'll be done. And the other bank said, you have to visit the branch to just complete that last step. Okay, I said, you are not open on Saturday, and I'm leaving on a Sunday evening. And that pretty much made the difference of which bank finally I had to go with. I didn't look at interest charge, I didn't look at what benefits I'm getting, but sometimes it's also that part which comes into a factor. And the second thing is, this is something which we did with one of our customers in Egypt, is that coming to this hyper-personalization in the ecosystem, we all know the likes of Amazon and some of these, even the Walmarts in some form or the other, taking e-commerce at a different level in various countries. But in some countries, they have not done it themselves. They have invested. And that is because some other local player, and one of them we are helping through our platform, has achieved that level, where they've got the banks and the suppliers, the SMEs, the customers on a platform purely driven by open banking and APIs. And they've taken so much of a lead that even the biggies thought it's better to invest rather than trying to recreate. I think, so you are right. I mean, it needs a bit of collaboration to achieve that level of hyper-personalization. And thank you for sharing that view. As I can see, all 3 of you being business heads, eventually pointing to our great man on the technology side, he has to make it happen. Okay, so Jack, essentially you heard the views, and we also heard about from the CEO of Fingo about fintech, and even yesterday. So let me just narrow down the question a bit in terms of what kind of collaboration what are the areas where you feel that fintechs can plug in some of the gap in a faster mode, okay, so that we talk about collaborative coexistence rather than competition. Okay, and I mean, I'm sure as technology head, you are you're also looking at an ecosystem, not everything to build in-house, not just from solution providers, technology solution providers like us and others who have participated here, but also fintechs who sort of combine technology and business. So what kind of collaboration you're looking at to plug the important gaps that might be there?
Thank you. So I think the biggest gap we have in this country and all over Africa is the gap that's created by the SMEs and the unbanked people who the banks are not able to reach to. For most of the formal people in employment, that kind of thing, it's easy. It's easy to give you a loan because it's, as you said, we have all the data. We have your transactions, we have your KYC, we're able to give you that. But when it comes to SMEs, it becomes very, very difficult because as of now, still 80% of our transactions are in cash. There's a lot of areas whereby this cash is not recorded. So as a bank, even if I want to give you a loan, I get to a point where I'm not able to get your financial identity. So this is actually one of the biggest areas whereby fintechs can, I see opportunities for fintechs. If you're able to give solutions which can offer businesses seamless integration and to be able to allow them to create a financial and credit identity, then it becomes a real area for integration. Of course, one of the key issues that banks have in terms of dealing with fintechs is that we are regulated. And once we deal with you, your customers become our customers. So the CBK expects us to have the same kind of fidelity, the same kind of knowledge of our customers, whether they're coming through the fintech or whether we've onboarded them directly. So of course, fintechs really need to improve on the KYC and actually need to be able to get to the same level of KYC that the banks do. And that should be able to actually provide a lot more opportunities for fintechs to work with banks. One other thing is, of course, we've talked about the data, and data actually forms all the lending decisions. Now, we have opportunities whereby fintechs can be able to use machine learning, AI, to be actually able to create credit engines, because as banks, we may not have all the financial strength or the time to be able to actually deep delve into all this, because we all have finite resources. But this is an area whereby fintechs can be able to partner. I think there's a fintech in India, which I think all the banks in India are actually using for credit scoring. And of course, you have to pay a fee for that. So it's a big area of investment whereby fintechs can consider. Where we are right now as banks, most banks in Kenya, we already have APIs that will allow fintechs to be able to consume our services easily. A lot of banks also have sandboxes whereby you don't need the bank to take you through. You can actually go test your integrations, and all you have to do is to give you credentials once you've signed up. So it is really quite easy, quite quick. I think the main point is look at an area whereby you can actually offer what the banks don't already have, because we already have the customers, we already have the services. What more is this that you can bring to the table? Thank you.
Maybe I can comment.
Sure.
So in Letshego, we are especially in Kenya, across the group, Kenya forms the biggest share in terms of servicing micro and small enterprises. So if you look at that specific segment of customers, I'm just following up on what he's talking about. A lot of financial institutions and mainly banks shy away from offering, especially credit services to that specific segment. And what, as Letshego, we're trying to do, or we are doing, is actually going into that segment and actually listening to these SMEs, because if you look at some of the reasons why banks decline to lend to them is they look at a very narrow set of data, to deduce risk, credit risk. And we can't really fault banks, because there are certain policies that have been set in these organizations that have to be adhered to before credit can be, given to whatever entity. So the challenge then for all the financial institutions, including ourselves, especially for that segment, is how then can we look at technology and use the technology, the emerging technology, to get data sets that will be able to help us provide these services to that segment. There was a report that was done for Kenya specifically showing that the biggest chunk of micro and small enterprises are actually unable to scale to the next level to become small and medium enterprises, where a lot of financial institutions concentrate on. So we have over 90% of these micro and small enterprises who are unable to scale, because for them to be able to scale, of course, they need credit, to be able to grow their business to the next level. So where the digital era we are playing at right now, we're able to use a lot of the emerging techs, a lot of the already built solutions using technology and the different fintechs and even telcos have built to be able to get other ways of assessing credit worthiness for that specific segment, so that we're actually able to grow our economy. The micro and small enterprises segment actually form the largest chunk of where a lot of Kenyans derive their daily bread. However, they're underserved by all of us. So we have to really think about technology from a different point of view and run away from what we've been thinking about, especially when it comes to credit.
Yeah, absolutely. You're right. In fact, this is very, very key. In fact, if you see, you mentioned about the telcos, so probably we need to look at the other touch points that they have, even if it is outside the banking ecosystem, pull in data from there. Okay, I mean, today, by virtue of smart devices, smartphones, let's take, for example, WhatsApp. Okay, I mean, I'm sure, or Facebook, for example, we call it unstructured data, but then there's also slowly a lot of services that are getting in there. And how you integrate that data to know more about the person. Because SME, we are not talking about huge volumes. What we are talking about is essentially an individual who is running a business, and these are lending decisions. These are not just customer onboarding for accounts and all. How we integrate that data and sort of into the decision-making process, that's going to help. Moving away just from this this topic a bit, moving to the other spectrum. I know most of the banks that you represent, almost all of them, at some point, you have quite a bit of high net worth individuals. Okay, those customers who are who has a large lifetime value, as you can say, who are transacting with you on many areas and all. And there is this concept of metaverse, which is now sort of coming up, and where sort of, I mean, not only just technology companies, but the business in terms of banks and all are trying to simulate certain scenarios, which also points to the hyper-personalization area, and create an experience which otherwise may be sort of obstructed by distance. And touchwood, we are gathered here, we are interacting, but the world is really uncertain. Okay, anything can happen anytime. Okay, it's, but we don't. We sort of want to mimic a situation where they get the same experience. So in this regard, your banks, what's the thought process that is going on for that segment, and then eventually moving into the other mass segment also? But are you thinking of leveraging that space to sort of build an environment for your customers, that kind of a thing? Maybe Jack, Ashish, you can also.
Yeah, so we discussed about this fintechs. Okay, so SMEs, as you mentioned, or other segment, SMEs anyway, it is a backbone of the economy for any country for that matter. Okay, and they are the largest employment generator also. So that is why it is very critical. And during COVID period also, okay, the banks and all, they came up with all sort of assistance so that they can survive, because they were the most affected business entities. Okay, because they have only small day-to-day kind of activities, business. They run their business. Whatever they earn on the day, they spend that same thing on their to run their businesses. So it was very critical also, and it was very much required that that backbone is intact. Yeah. So that is how we also as a bank, we tried to support them. So we came up in just October last year, we launched our digital banking, digital lending product. So where our customers can borrow up to 150,000 and they can repay their loan up to 90 days and very, very competitive interest rate. So then we have launched also salary advances for employees of our customer. If okay, because there were all kind of hardship people are facing, salary cut or job losses and all. So as a bank also, it was our responsibility to as a being part of the society as a CSR activity also, to come up with all kind of assistance. So we launched few products for our customers which help them okay to sustain. We try to kind of restructure their loans also. Yeah. So banks have done their part. Yeah. And with the help of support of the government also and central bank also, we came up with so many innovative products which actually help them to sustain during this last 2 years that during the hardship. And just to comment on the fintech part, okay, so fintech, I think for the bank, it is not a competition. Okay, fintech, we see them as our partner, because as a bank, we, as it was mentioned, okay, we are also working toward that four walls of that regulation and all. Okay, and bank also have their certain limitation, their technology department and all. Okay, you need those kind of talent, innovation. Okay, so fintechs are actually helping. They are working hand to hand with the bank, and we launched some of the good products. We want launch international remittance product 2 years ago with the help of one Kenya-based fintech partner. Then even this our digital lending we launched with one India-based fintech partner. So the areas we know where they are innovative, they have come up with some good product. Yeah, and they are their time to market is very fast. Yeah, as a bank, we have to go through a lot of process, approval, this, that, but they already have a ready-made product at hand, okay, which we can quickly plug into our channels, internet or mobile banking and launch it for our customers. So during this COVID period, it actually helped us when we were looking for some quick kill solution. Okay, it came handy where we had all these products, ready-made lending product, remittances product, some other transfer payments product, which we quickly launched with the help of all these fintechs.
You want to take some points on this?
No, so just absolutely agreeing with him. That's exactly what I think every bank ended up doing. We worked with a lot of fintechs. We did put out, we looked at it and said, and everyone is right to assess that banks, we have some rules that perhaps limit what we can do with the small business owners, but they are our core customers. So we looked at it and started to do products like cash flow lending, accepting chattels, all sorts of bending on changing of our policies and structures so that we could be able to build these products and onboard them, and especially digitally, because you do understand there's a fundamental problem with businesses. And why they are considered high risk, small businesses, why they're considered high risk is because today there's a kiosk here. When I come tomorrow and there's no kiosk, where do I find that guy? So the fundamental problem is that, you see, with an individual, I can threaten to list you on CRB and maybe all the other banks, no one will lend you, but a business name, tomorrow you go, you open yet another business name. That's why I was saying that Nairobi business owners on average have 10 businesses per person. So it doesn't really onboarding them from that front. And even if I say, let me get the actual directors of that company and then see who I can lend to, a lot of them you find they're listed. So you have to make a determination of how flexible will you be about this lending to small businesses. So I think there's a lot of effort being made by the banks, a lot of flexibility being sought in trying to find a way to manage the risk. Of course, pricing is a challenge because our friends won't let us increase pricing anymore. So by that I mean the regulator. It's dangerous to call them friends. So let me move on. So yes, so those are the challenges. Some of the ones that we are experiencing. How do you drive deterrence? What kind of support can you get from the governance front? What can you do? What technologies can you leverage so you can be able to get, because the more high risk it is, the more expensive it is for everyone involved. And I'm sure Anita can talk about how much it impacts the good customers to have a huge base of customers you're doubting their credibility.
Sure. So thank you. I think we are almost time here, but Jack, just your views on, I mean, we all talked about the onboarding of customers and how digital can help. Yes, there are certain limitations. We just can't go all big bang so that the business is not at risk and all. But once they're onboarded, the servicing part of it and making them profitable so that and efficient, and then also scaling them up in terms of becoming a broader customer of the bank is quite a bit of responsibility lies on technology, right? I mean, whether it's from an experience point of view and servicing cost point of view. So any inputs, just closing inputs before we...
Yeah, so I think one of the things you mentioned earlier was about COVID. I think for me, COVID was a blessing because the customers who are reluctant to move were now forced basically to move. And I think for most banks in Kenya, we're actually doing about 80% of our transactions on mobile. So for us, of course, that gives us an opportunity to be innovative, to be able to serve our customers better. At NCBA, we were the first bank to actually come up with a mobile lending and mobile savings product, which is Mshwari. And we keep on striving to become innovative and to be ahead of the game. So, of course, one of the other things is for you to be able to get value from customer, you must have a relationship with customer. So to do this, we definitely had to implement our data lake, which is able to actually give us a 360-degree view of the customer, so that when I'm talking to John, I actually know what John needs. I'm able to customize the products that I'm going to give him. I'm able to give him personal messages, happy birthday, happy anniversary, all those kind of things. And this helps to build loyalty within our customers. And based on loyalty, we're actually able to do cross-selling, upselling, and actually be able to get a lot more value from the particular customer. So all this is basically technology-driven, it's data-driven. We have implemented a very robust CRM system, which is able to, do prompts in terms of if a customer is calling in and all that. But then, of course, with the personalization, customers are starting to expect the same way when you search for a book in WhatsApp or in Google and you go to Facebook and all the adverts are for books. We are striving to get to that level of personalization whereby I'm actually able to go more and deeper insights than what I'm getting from the structured data that I already have.
Yeah, totally agreed. Yeah, so I think 40 minutes is always a very short time to talk about all these topics, but very good to hear about some of the initiatives in your organizations, and I'm sure together, I mean, the pace that we have picked up now, whether it is induced, forced, or natural, doesn't matter. I think the pace continues. At the end of the day, it's about serving a broad set of customers, serving them profitably, and improving their experience, which I'm sure with what we are doing, we'll be able to achieve. I would like to really thank all of you for participating and sharing your views, and thanks to the audience as well for hearing out some of the insights that the team brought in. I don't know whether we have time for questions, but just want to be guided by you, Ram. How we?
Okay, no problem. If there is, I can only give a chance to only two. I can see there. So let's get a mic coming on this side. Only two, kindly. She's there. Her hand is up. One more. Thank you. So we've got only one question. Let's get a mic here. Do we have somebody? Who's the mic? Okay. Just give me that. Let me rush quickly. Where is she? Yes. Thank you.
Thank you. I'm sorry I'm coming in between your lunch, so I'm so sorry. My name is Dimple. I am from DTB Bank. So my question is very bank-centric to, I think, all the banks now were seated there. What are the challenges you come across when it comes to diaspora banking? It is one of the most crucial and important as well, because we hold a high client portfolio, obviously. So what are the challenges that you have, and what are the solutions to go about it when it comes to diaspora banking and, building innovations? Thank you.
Okay, this is Dimple. Fascinating. Okay, thank you, Dimple. Diaspora banking, the greatest challenge, of course, is how do you onboard that customer without requiring them to come into the country so you can physically onboard them. So eKYC solutions would be fantastic for resolving that very quickly so you can be able to bring them in. Then, of course, can you give them the services and deliver your tokens, your SMSs, and so forth, which, of course, it's important to implement email so that you have those. So then at that point, you look for your IT technology expert to help you solve those problems. The other gaps you come across, of course, are how do you validate some of the information that they have provided you? Do you have the integrations that are necessary? That's why the eKYC customer is so important. The eKYC partner you use for digital ID validation, because then you're not telling your customer, go to your bank, have your bank stamp, and then now your Nostro team goes to look for them. So, I mean, there's a lot to smoothen the process and make it seamless and feel like the person is having a not so painful experience to onboard onto the internet banking services. And then, of course, you have to, as much as possible, ensure that the services you're offering enable them to not only make the transfers, but also make payments in country. Because that's also one of the most painful things for most people, because they find that they trust their relatives to do it, then they complain that their relatives did not do what they agreed to do. So it's up to you as an institution then to build all those and integrate the necessary services so that you give them as much autonomy as possible. So onboarding, building effective services, and then easing the CX experience, very important for the diaspora. And then it should work well. At least that's our experience and some of our aspirations, because much as I sounded like I know, we've not done all of them. Let me just be clear.
Yeah.
Yes, it's right. Angela is correct. Even right now I'm involved in this. We are also trying to offer this diaspora banking because it is a big area which is not yet tapped. Yeah, so it is one of the most, this thing from revenue generation, apart from tea, export and flower industry, it is one of the top 3 revenue for Kenya. So the documentation, as Angela said, is the you can say bottleneck. We are trying to find an agency because they are based out of different countries and each country has a different set of documentation, KYC and all. So we are not yet able to find some agency which can do it for us. They can validate their document in the country of residence, and then and you know the regulation how it is, yeah. And the challenge in fact, we partnered with one fintech here in Kenya for international remittance. But when the question of inward remittance came, yeah, outward is fine. I am sending across 70 countries. But when the question came to receiving money, okay, immediately my Forex and Treasury and International Division put n number of red flags. They'd ask me, okay, how you are doing AML, KYC, money laundering, this, that, and finally we had to give up. So receiving money within all those compliance, risk and all is still a challenge. It is not that smooth. So you have rightly pointed out, diaspora banking is a big opportunity, but we are still not able to tap that area because of all these documentary regulation, risk, compliance, and cross-border challenges. Yeah.
Yeah. Okay. Thank you, Ashish. Thank you, Angela. Any other?
Thank you. Done?
Yes, so I think it's flashing red, so we would love to continue, but there is lunch there as well, and yeah, I don't want to be penalized for over time. But yeah, thank you very much, everyone. Thank you for joining. And I'm sure some of the questions and all can be taken while we are breaking for lunch or during the coffee session. Okay, and thanks once again to the organizers for giving this opportunity.
And just as wonderful, a nice photo there. Wow, thank you so much. Wonderful. Can't forget this. Forth your hand. Wonderful. Yes. Let's have that photo now. Round of applause as they go. Thank you so much. Thank you so much to our panelists.